What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AMC for AMC Entertainment, of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will be an update, and my goodness, kind of exactly as we mentioned. It unfolded picture perfect. We talked about AMC only kind of gapping up, and it didn't really even gap up at all based on the open inside of the prior day's range, but it was hanging out up here in the pre-market, right? Obviously, it fell back down. The only reason it was gapping up because it was sort of a sympathy move to GME, of course, who announced their sort of NFT/crypto platform. Regardless, that's all hindsight. We know it did what we thought it was going to do. Nice fade off the open, whatever. What are we going to do about it going forward is, of course, always the question to be asking. And to me, it's all about this little miniature support trend line on the 30-minute time frame. If this starts to break down, fine. Your daily downtrend just resumes. We have nothing more than a lower high here, significant lower high, I might add, and we are starting to consolidate right in here for a daily bear flag pattern. We know that we've had the failed inverted head and shoulders from here. That, of course, is a bearish indication, the fact that this pattern did not unfold to the upside. It's as simple as that. We know that there's really no reason to be thinking about longs inside of AMC if we scrunch up the daily. I mean, we've just been fading off slow and steady ever since we had these euphoric highs closer to 65, right? So there's no reason to start thinking that all of a sudden, out of the blue, AMC is just going to do something like this. If we're going to get long on AMC, I've said this the other day as well, it needs to be a break back up and over 31. And again, we're quite far away from that as of right now. If there's going to be any progress made towards that level, it should have happened on this gap up, and it just simply did not, right? If we take out the fibs from today's session, just to analyze how weak the close was, we'll come in from the high down to the low of today's session, and what you'll notice is that all of the consolidation was underneath your 38.2, which is not a good thing for the buyers. As a matter of fact, it's nothing more than a bear flag. If we get the breakdown of that support trend line as we mentioned, we would expect an equal low here closer to roughly 2091, call it 21 even if you like nice round numbers. And if that goes, as we've mentioned from in the past, let's scrunch up the daily one more time, there's really no structure until we hit about 1450. Maybe you could make the rough argument for a gap close here to 1638, but regardless, that's still $4 to $5 underneath us, and you do not want to be wrapped up in that type of move on the long side, right? On the wrong side of that trade. So in AMC, the sort of MO continues here. It's not a buy. It's just a continuation to the downside type play. We have some levels to pay attention to, notably the short-term support trend line, the breakdown of today's lows. It's a bear flag. Really nothing about this is indicating any type of long opportunity. We're patient. If it's going to be long, I suppose there could be a potential for a scalp if we make our way up to this and then do something like that. But again, that's still very far away. There's a lot of work that would need to be done if that would ever come into the sights of us or of sort of our trading strategy. So that's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.